Good morning, good afternoon, good evening. Welcome to Plaid's Policy Pulse Workshop. I'm Ben White on the policy team with Plaid. We are so very excited to have everyone joining today. Lots of exciting content to cover here as we get together to talk about some interesting developments in the policy landscape related to fintech, and in particular talk about a vision that we want to paint together with all of you for a future of consumer-centric fintech. So I'm joined today by my colleagues, John Pitts, who is our head of policy, and Katie Neal, who is our head of policy, outreach, and advocacy. And together we will talk through what we see as some really fascinating developments, both in terms of some narratives that we're seeing in the ecosystem and ultimately what we as an ecosystem want to do to drive towards that future, as I described, of consumer-centric fintech. Before we get started, just a few housekeeping notes. We do have a Q&A widget. We're on the Zoom platform today, which I imagine many of you are familiar with. Please go ahead and throw in questions as they come up, and we will hold them to the end to give our answers. We are recording this event, and it will be hosted on YouTube afterwards. So if you miss parts of it, or if you want to send it around, please feel free to do that. And please jump into the chat if you do have the time to let us know who you are, what you're building, and what in particular you would like for us to cover. So as I mentioned today, we're going to talk a little bit about what we're seeing develop in the ecosystem, in particular, two narratives that are currently coming to the fore, how we see them impacting our industry. We're going to spend some time talking through shifts that we're seeing in the policy landscape and the impacts that we can expect to see. And finally, we'll wrap up with how we can engage both with policymakers and in particular with consumer advocates. And as mentioned, at the end, we'll get around to questions and answers. And with that, to kick us off, I will hand it over to John to talk us through the narratives that we're seeing.
Thank you to my dear colleague, Ben. And yes, that was me kicking things off with a very bad pun. You all are probably in for much worse over the course of the next hour. I was very tempted to start this off by running around and screaming, developers, 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 Steve Ballmer style, but there are two big prohibitions to that. One, it is COVID, so I am in my house, not on a stage, and my kids are upstairs doing schoolwork, and I will get yelled at for disrupting them if I'm too loud, though I probably am already being too loud. And two, as a result of COVID, I, like many of you, have not gotten a haircut recently enough, and so I'm sort of rocking the anti-Ballmer hairstyle right now, which means you get none of that enthusiasm and none of that energy. What you hopefully will get is some real substance, in particular from Katie and Ben, on how as a fintech, you may want to consider navigating the current policy environment. But before we get into that, let me just lay a little bit of groundwork on the moment that we are in right now. And I do think it is a specific moment, and it's one that's worth paying attention to and really prioritizing for fintechs to understand the environment that they're operating in. If you can get to the next slide. We, in the last 6 months, maybe 9 months, have seen the emergence of a real sort of set of conflicting narratives in Washington, D.C. About fintech. And one of those narratives has been around for longer. It's probably the one that you're most used to on fintech, which is sort of the optimist, innovation-driven, here's how fintech can improve the lives of consumers narrative. You have stories talking about sort of where fintech can help people's lives. You have the CFPB and other regulators spinning up auspices of innovation, creating new guidance and regulatory interpretation to help accommodate some of the new use cases that developers are building. You've got studies showing that the consumer benefits of fintech are potentially real and potentially quite substantial. The thing I would point to as sort of the greatest piece of evidence on this optimism side is what we saw almost a year ago today, when in the face of a severe COVID shutdown and deep, deep impacts on small businesses, the lifeblood of the American economy, we saw and by we, I mean the United States government, not Plaid specifically, saw a real risk of hundreds of thousands, if not millions of small businesses being wiped out overnight. And the administration responded to that with the creation of the PPP program, a lending program to help get small businesses money to make their payroll and to make up for the gap in income they were experiencing due to COVID closures. The thing that was particularly special about that is for the first time, Congress authorized fintech lenders to participate in an SBA-run lending program so that they could originate they could originate loans to small businesses that preferred to do business with fintechs as opposed to banks. The reason I put that in the optimist category is very quickly after that decision was made, you saw some blowback against the largest banks. They were only lending to existing customers. They were lending to very large businesses. And it quickly became apparent that a lot of the loans going to the very smallest businesses and often disproportionately to Black, women, or Hispanic or other minority or underrepresented population businesses were coming from fintechs. And that shouldn't be a particular surprise. The banks are very good at having long-term relationships with high-value customers. And fintechs have carved out increasingly a niche in the very smallest, real sort of single or 2 or 3 person businesses. So not a surprise that we saw that impact. And I think the important thing is there was broad recognition in Washington, D.C. and policymaking circles that in order to have a comprehensive relief program, fintechs needed to be involved because of their ability to serve parts of the population, parts of the economy that banks weren't covering as well as we might like. At the same time, some of this counter narrative started developing. You've recently seen stories of a potential OCC nominee not getting the nomination because he was viewed by some as too cozy with fintechs, having served on fintech boards. You have seen real pushback again at the OCC, not that the OCC is the only agency involved here, real pushback on some of the OCC initiatives to develop fintech charters or payment charters to expand their charter base to non-bank companies and bring in more fintechs. And you've also seen some real questions about some fintech products, whether they are actually helpful in doing something like advancing wages to consumers or whether there are potential consumer harms there. If you can go to the next slide. I think this really culminated and sort of very much culminated in terms of public awareness in the GameStop situation and the hearings that came up around it. And this article from Politico from about a month ago really, I think, captures what some of that narrative is if you put the finest point on it possible, which is fintech something that is actually new? Or is it, in the words of Jeff Hauser, the worst parts of Wall Street and the worst parts of tech companies combined together into something that policymakers shouldn't and increasingly don't like? The question, before I sort of get into the details of these narratives and what you should be doing about it and how you should be thinking about it, is why now? Why is this the moment when sort of in the DC policy circles and lawmakers' consciousness, fintech has become a thing to focus on and to make that sort of decision about whether it's good or problematic? If you can go to the next slide. I think really what's driving it is that fintech has become central to the financial lives of tens of millions, if not hundreds of millions of Americans. And that centrality has accelerated quite dramatically as a result of COVID, where none of us, frankly, had the option, or very few of us had the option of engaging in traditional brick and mortar financial services. Everything had to be digital. Over the summer, Plaid put out a survey in partnership with the Harris Group. I will confess, a little bit worried about putting out a survey of people's finances in the midst of a financial crisis, but did it anyway because we thought it was important to know where the American consumer was. What we saw, I think I found a little bit surprising. Maybe some of you didn't because these are your customers and you know their experience. But what we saw was that 59% of Americans were using more digital apps and digital financial services than they did before COVID. 69% of them said that that technology has been a lifeline for them during COVID. And 80% are saying it's working well enough that they maybe never have to go back to a bank branch. So what we're seeing here, if I can sort of sum up these three numbers, is fintech is being used more. It is being used more for the core needs of the American consumer, the core financial needs, not just a nice to have, it is a need to have. And as people use it more, they are becoming more comfortable with it and starting to reach the conclusion that they can rely on it exclusively. If we can move to the next slide. We're also seeing consumers reporting that they are getting better outcomes as they engage more and more with digital financial services and fintech. 69%, they are more confident they can manage their money with technology than without it. 73% say they feel like they are more in control of their finances. And those are two distinct concepts, confidence and control. And I think they're really important to get into, and Ben and Katie will be able to talk a little bit about this later on. And 70% of Americans said that when they use financial technology tools, they are getting better results. So when you look at this trend, people are saying they like it more, they're using it for more important things, and they are saying they are getting better results. It's not a surprise, and it shouldn't be a surprise, that it's coming more to the fore of policymakers' minds as well, because it's no longer really a question of, is fintech and is digital financial services a passing fad or not? It is this is a real part of the financial services ecosystem, and we need to treat it seriously as one. And so if we can go to the next slide, this is where I hit you with my very exciting plot twist, do like a full Christopher Nolan prestige, like actually they were twins all along. I don't think there are two narratives here. I think what we are seeing is actually a single narrative, which is congratulations, fintech. You are part of the financial services ecosystem. Now you are going to be treated to the expectations that we have for everyone else in the financial services ecosystem. Whether we like it or not, we have all chosen a business that is part of the most heavily regulated sector of the economy. There are probably some healthcare lawyers out there who would argue vociferously with me in describing it that way, but I think our experience and your all's experience is we are in a very heavily regulated sector of the economy. Importantly, we are not just in a heavily regulated sector of the economy. What fintech is proposing to do is democratize those financial services, meaning bring new people, bring people who have been left out of traditional financial services into financial services. Those same people, those people who have been left out, are the people that much of the DC policy apparatus has been built to protect. The people who are viewed as sort of the most vulnerable, the ones who need the most protection as they engage in this heavily regulated sector of the economy, are the ones that fintech is saying, we are helping them. They are our customers. They are the ones who we are bringing in. That means you are building your business model around the people that policymakers think need the most oversight, which means you are going to experience the most oversight. You're also doing something new. Now, new is interesting here because if we think back to that GameStop hearing, what did we hear over and over again? Payment for order flow, payment for order flow, payment for order flow. You would maybe, given that context, be surprised to learn that Robinhood is not the only company doing payment for order flow. In fact, basically everyone does payment for order flow. But because Robinhood is perceived as a thing that is new, anything that they are doing, whether or not it is in fact new, whether or not it is in fact fintech or anything distinct from what a traditional FI does, is going to get an additional layer of scrutiny. That may feel unfair. You cannot have your reaction be, that's unfair. You have proposed a world of democratized financial services. And part of that means being even more forward-leaning in explaining what you're doing and explaining, if it is in fact not new, that it's not new. And if it is new, why it's a good thing and why it's helping your customer, the consumer. To do that, you really need to navigate sort of a key cultural distinction. DC and Silicon Valley speak completely different languages. Your obligation, I think, is to say the same thing in both of those languages. Be able to explain your company as well to policymakers and as honestly and truthfully as you do to a VC firm, just using a different language. You also should be thinking about reaching out to policymakers and consumer advocates before they reach out to you. I think that telling your story, telling the honest truth about your business and sort of where it's going, rather than waiting and hiding from the regulators, is almost always the right strategy when it comes to a new business and a new business that is getting this kind of attention. You should also be aware that while your business may be 5 years old, 10 years old, 3 months old, very often the person you are talking to when you're talking to a policymaker has been regulating financial services for 15 years, 20 years, 30 years, maybe 40 years, doing the same thing. They have seen different fads and different types of companies and different types of products come and go over all that time, and they know that history really well. You knowing that history and knowing where your company fits into that history will give you a huge advantage in explaining the future, how you want to contribute to that future, and why you think that future is good for consumers, which is what it ultimately has to come down to. So that was a lot of context setting, and maybe something that everyone already knows and is therefore not super interesting. So I will shut up now and hand it off to my colleague Katie for the stuff you guys probably actually want, which is a little bit more of a substantive dive into what are the actual issues that are shifting in the policymaking world on this backdrop of the either competing narratives, or if you're willing to buy into my turn, this single narrative of financial services and fintech becoming part of the core consumer financial experience. Katie? I think you're on mute, Katie.
Thanks, John. That was a great overview of the narrative that we've seen take place over the last couple of years, particularly during COVID. And I'm going to talk a little bit about the shifting policy landscape that we're operating in now and how we can interact with that policy landscape. So as John mentioned, in 2020, we saw signs of increasing focus on consumer privacy, transparency, and control of their financial data. And COVID-19 has accelerated fintech growth and interest from regulators. If you look at this graph on the right, you'll see that global policymakers, it's increased their interest in fintech and regulating fintech 45%, and interest has remained high among global policymakers at around 40%. So regulation is coming, policies are coming, and we are keeping an eye out on what they might look like. We have new financial regulators and policymakers. So at the CFPB, we have Rohit Chopra, who during his confirmation hearing said a really heartening quote, which was, "I believe that consumers should have control over their data and over how their data is used. I'm also sensitive to security and privacy concerns that many stakeholders have. I do not believe you have to choose between consumer choice and security and privacy." And that's a value our ecosystem holds. The two are not completely binary. And there's a lot of options for us to think about innovation and consumer control of data while making sure it's securely protected and safe. Senate Banking, Senator Brown is now chairman of the Senate Banking Committee, and he is skeptical of tech and skeptical of how tech uses data. We have new leadership at the OCC, which is unannounced yet. At the SEC, we have Gary Gensler, who is really excited about innovation. And at the FTC of Lena Khan, who is definitely a skeptic of technology and will be someone that we all need to work with closely. And so what does this mean? What does this change in the policy landscape mean? It means we're going to get new legislation rulemaking. We're going to get hopefully a Dodd-Frank 1033 rulemaking, which I will talk a little bit about more later. We might get a payday rulemaking finally. We've been talking about that for 10 years now. In overdraft rulemaking, another one that's been kicked around for a long time. We might get a federal privacy bill finally. Actually, the Future Privacy Forum said 2021, we are guaranteed to get a federal privacy bill. So everyone should be keeping their eyes out for that. And we might also get piecemeal fintech legislation. And I'll talk a little bit more about why I think that is on the next couple of slides, if you don't mind jumping ahead. So one of the things that I mentioned we should all be looking out for is privacy legislation. So right now there are a few federal bills floating around. Data Act from Senator Brown, which attempts to minimize the sale and resale of data, as well as has data minimization rights and use case requirements. We have the American Framework to Ensure Data Access, Transparency, and Accountability Act. And we have the Consumer Online Privacy Rights Act. And the interesting pieces about these are partisan bills, but they're getting much closer together. And there's going to be a very strong bipartisan push for privacy legislation, especially given that states have started to pass comprehensive legislation. So Virginia and Nevada both passed bills that look very similar to the California Privacy Rights and Enforcement Act. And I think we'll start to see many other states joining that bandwagon either in 2021 or 2022. So on the next slide, I'm going to talk about another important piece that goes along with this. One thing that we think a lot about, because it does power the fintech ecosystem, is consumer ownership of financial data. Other countries have been promoting this for a while. Europe instituted the Payment Services Directive around 10 years ago, and which mandated APIs at all the large banks. Australia has a consumer data right, which says that consumers own their data and can share it however they want, not just their financial data, whatever data they have that might be available to them or generated from them. And in the US, we have Section 1033 of the Dodd-Frank Consumer Protection and Wall Street Reform Act. The goal of this bill was to give consumers more transparency and control over financial products and services in the wake of 2008. And the piece that really speaks to data ownership in the US is subject to rules prescribed by the Bureau, a covered person, in this case, a financial institution, shall make available to a consumer upon request information in the control or possession of the financial institution concerning the consumer financial product or service. And that to us says the consumer owns their data and they have the availability to share that data for any products or services they may want to access. So recently, the CFPB actually asked 46 questions about how to implement Section 1033. So we've had this law in place for 10 years now. And just this in the past couple of months, the CFPB said, hey, we actually want to do a rulemaking around this. What should it look like with consumers own their data? Should it look like Europe, which has mandated APIs? Should it look like Australia, which has a broad data right? We submitted a 60-page comment letter that I encourage you all to read very intently, but if not, we have a good executive summary. And we advocate for data parity, an equitable ecosystem, and a focus on encouraging competition to improve consumer outcomes. So on the next slide, I'm going to talk a little bit about some of the other sea changes we're seeing. This is a really important one. So John spoke a little bit about the idea that there's been this narrative that fintech is perhaps unregulated or that it's scary and new. And policymakers are asking questions about this. They're asking whether fintech is regulated. Senator Ossoff, a new senator from Georgia, said, on the one hand, more competition could benefit consumers. On the other hand, there are looser regs for industrial loan companies, which could have financial stability and antitrust concerns. What are the implications for consumers, regulators for these issues? And Senator Brown said, we can't allow Silicon Valley to play by different rules. Incumbents are sharing these similar sentiments with regulators. So the American Bankers Association is advocating to keep non-banks out of the federal payment rails. They want to delay non-traditional entities access to master accounts of payment services until there's a uniform policy. The Clearinghouse said that arrangements between fintechs and smaller financial institutions evade interchange fee limitations and create an uneven regulatory playing field that unfairly disadvantages large financial institutions. So to that we ask, many of you you're thinking about all the laws you comply with, you're thinking about all the regulations you comply with. The question is not whether or not fintech is regulated, the question is whether or not fintech is supervised. And so that is what the crux of the matter is. We're all complying with the same laws. We're all complying with every law that's out there, and we're all trying to be best in class and making sure we're even getting ahead of a lot of these laws. However, what we are not, what a lot of fintechs are not, is supervised. And so on the next slide, I'm going to talk about a few things that we can do to sort of move the needle from the idea of regulated versus unregulated to should fintech be supervised. I think it's time for engagement. John spoke a lot about this. You shouldn't be scared of policymakers. You should be taking your products to them, showing them to them, and working with them to make sure that you are developing consumer-friendly products and that you are catching any issues before they can become a bigger problem. Should you ask to be supervised? We think so. Plaid actually directly asked for supervision in our CFPB comment letter. We said we like direct supervision over large data aggregators, such as Plaid, as part of a larger participant rulemaking process. And that's how we found the best arena to ask for supervision. And share your story with regulators and policymakers. And Ben's going to talk a little bit more about how to do that and to sort of build data points for this narrative that fintech is doing great things for consumers. Of course, you should all be doing your own evaluation of what laws you comply with. You don't mind going back 1 second. Of course, you should all be doing an evaluation of what laws you comply with, but we should all be working with policymakers to understand and build a desired end state. If there's a world where policymakers are designing privacy laws without hearing from us, or they're designing data minimization laws without hearing from us about how that might hamper innovation and hamper a lot of the use cases that consumers want to use their data for today, that's not a great end state. If we're just building our own end state without any input for policymakers, we run the risk of ending up with products that don't match up with what policymakers are thinking about for the fintech ecosystem. And the goal is to work together to make sure that we are building a state that is consumer-centric, that also can power innovation for the next 10 years. Imagine if there had been some of the limitations 10 years ago that are being proposed today, we wouldn't have the same burgeoning fintech ecosystem that we have. And I think the next 10 years are going to be a really exciting time for fintech ecosystem. We've started to see it with people moving into payroll APIs and products from payroll. And I think that we'll keep developing more and more tools and access for consumers in order to best assess their financial health and manage their financial lives. And so we need to do that in tandem with policymakers. I'm going to kick it over to my colleague, Ben, to talk a little bit about how to sort of think about this engagement and tools that you can use for engagement.
Thanks, Katie. Yeah, obviously from Katie's presentation and from what John talked about earlier, there's a ton of moving parts here. And I think it's really important to have a really holistic approach in how we think about engaging with the broader policy ecosystem. So as much as Katie talked about how to engage directly with policymakers and regulators, I want to spend some time thinking about another corner of the ecosystem that is also really important, and those are consumer advocates. So on the next slide, who are consumer advocates? Generally, these are nonprofits that investigate practices that affect consumers directly, and they'll take positions on policy issues that they believe could either benefit consumers or prevent consumer harm. These groups tend to consist of some of the foremost experts on consumer practices and bring a lot of research and legal power. But these groups take really seriously the way in which they develop a holistic view of what's going on in consumers' financial lives. And that means that engaging with these groups can be a really symbiotic relationship where they can help you and your organization understand what's going on in the broader ecosystem around consumer financial health. And you can also help them to understand what are the benefits that your customers are seeing from engaging with your products. So as these groups recognize that fintech is playing a larger role in consumers' finances, there's a lot that we could do to make sure that we're giving them the information that they need to develop those holistic perspectives. And here's just a couple of examples of how you can do that. If you are collecting data either via surveys or via your customers' usage of your platforms, there are ways in which you can safely and securely and privately share that data with consumer groups who can run their own research initiatives from that and generate really powerful insights as to how these tools are contributing to consumer outcomes. If you want to get deeper on specific issues, you can engage on things like thought leadership in the form of white papers. And what's really important as you think about driving these perspectives forward is to find issues that are affecting your customers, but also touch on broader policy issues that these groups really care about. So consumer financial health is a concept that really only came to be in the last 10 or 15 years. The Center for Financial Services Innovation, now known as the Financial Health Network, has really done a tremendous job bringing that to the forefront. And that's a group in particular that I would recommend you all look to for insights into how the overall ecosystem is thinking about consumer financial health and where your products fit in. We also mentioned earlier on sort of the more optimistic narrative around fintech. The US banking system, as broad and complex as it is, still has some pretty clear gaps in terms of access, whether that's credit access to consumers or even just standard access to a regular banking account. So financial inclusion is another angle that it's really important to think about taking when you engage with consumer advocates, because it's one that they likely want to know more about how your potentially historically underserved consumers are engaging with your tools. Coming out of the COVID-19 crisis, we saw a lot of headlines around new advancements in the safety net, but also a lot of gaps. So are there customers of yours who are looking to your technology to help them sort of bridge those gaps if they're struggling to access things like benefits? Obviously, with a lot of the additional stimulus we're now seeing from the government is only going to continue to grow in interest in the public sphere. And then finally, again, coming out of 2020, an issue that continues to be top of mind for many people is how can we continue to address things like the racial wealth gap, and what role can fintech in expanding products and services to folks who are maybe historically underserved can play in advancing that cause. And in general, as I mentioned, sharing data is one way that you can do that. Surveys is another. You can go out into the field, as we did with the Harris poll, and ask some really important and pressing questions to try to fill these gaps and help these groups understand overall how consumers are engaging with fintech tools. So finally, to sort of close out on this piece, there's one element that I also really want to elevate on the next slide here, which is it's not just how consumers are benefiting from your tools, but also how your products are presenting themselves to consumers. So these groups are focused as much on sort of consumer financial health and financial outcomes as they are on privacy and security. And the element that we can really bring to bear in terms of those conversations is this focus that I know many fintechs have on building transparency and control as a way to build trust with consumers. So if there are really good examples that you have in terms of how you went about building your platform, prioritizing the need for things like consumer education, and really giving your customers the right amount of information and the right tools to act upon that information at the right time, is just one more element to add to the conversation in terms of how consumers overall are benefiting from fintech. And just to sort of circle back to the other conversations we've had so far in this presentation, if we are to get to a place where we want to pursue that future of a consumer-centric fintech ecosystem, it really is about understanding what are the rising policy issues, understanding who's in the room and who's contributing, and making sure that we as providers of those tools understand how those tools are impacting our customers and can relay that information to folks who are looking to build really powerful perspectives to inform the policymaking that we do anticipate. So with that, I think we're really interested in engaging with all of our participants today. Thank you so much for tuning in so far. And we really do hope that for the remainder of this time, we can have a much more sort of engaging dialogue with you all. So if you look at the bottom of your Zoom screen, you'll see a Q&A widget. We'd love to hear from you. So please do let us know, what are you building? What questions do you have in particular? What concerns might you have on policy issues that we covered today that we're happy to spend some time going a little bit deeper on? And of course, we're always looking for ways to engage with you in order to align on these issues and make sure that our voices are heard as these important decisions are being made.
We'll also, of course, happily accept a note just saying that was 38 minutes of perfect presentation, no questions. Everyone should get 20 minutes back, though I doubt that is the case.
All right, I see a question has come in. And I think this is one that, John, given your background, having worked at the CFPB and sort of understanding some of the more granular elements of what goes into things like rulemaking, Katie spent some time talking about the Dodd-Frank 1033 rulemaking. I'm wondering if you can share with us a little bit of what we can expect to happen next. We had a reference to CFPB nominee Rohit Chopra's comments in response to the Senate, also as part of this presentation. So would be great to hear a little bit more, just maybe process-wise, on what's likely to happen next from the CFPB.
Sure. Thanks, Ben, and I guess thanks even more to whoever sent the question in. I think the single most important thing that will happen first is let's assume that Commissioner Chopra is confirmed by the Senate and becomes Director Chopra. There are a number of priorities the CFPB may have when it comes to rulemaking. And probably not enough regulatory attorneys to do all of them. So let me just really quickly run through the list because it may be of interest to folks. The Bureau has settled litigation that requires them to do a 1071 rule. That's a rule on tracking data on lending to small, minority, and women-owned businesses. There is perpetual interest in doing a rule to regulate the use of overdraft products by financial institutions. And a recent Brookings Institution study that has, I think, moved that issue up the priority list in Washington, D.C. quite significantly. The Bureau has a payday lending rule that has been under quite a bit of back and forth. It started in the Cordray term. Director Kraninger significantly revised it. I think there will be significant pressure from the advocates to either revise it further or revert it back. There's also going to be some rulemaking needed on the qualified mortgage rule, dealing with the $10 trillion mortgage market, and questions around student loans and other products. So 1033 is going to be competing with a bunch of other issues where stakeholders will want their topic prioritized by the CFPB. I personally think that 1033 should rise to the top of that priority stack because data access really cuts across every product that the CFPB works on, and consumers having the right to access their own data and use it to shop for a better deal or different opportunities has the potential to significantly change the dynamics in all of the markets that I just discussed: mortgage, small business lending, small dollar lending. I don't think I mentioned debt collection, but I'll mention debt collection as well, overdraft, all of those. So let's assume the CFPB moves forward. My guess is the next step in the process would be a SBREFA panel. SBREFA is one of the many beautiful DC acronyms. It is, I'm probably going to get this wrong, the Small Business Regulation and Flexibility Act. It requires, for some rulemakings, the CFPB to pull together a group of small businesses who may be impacted by a regulation, provide an outline of what the regulation may be, and get feedback from the small businesses about how that regulation would impact them, both positively and negatively. It's unclear to me whether 1033 would actually legally trigger a SBREFA requirement, but my guess is the CFPB will want to do one anyway, because if it's a heads or tails issue, why not do one and get the anger of members of Congress when you could just go ahead and do one and use that to signal to the market where your regulation is likely headed. Then after the SBREFA panel, you would expect a notice of proposed rulemaking. That is the actual written rule where businesses and individuals would then have an opportunity to comment on it, followed by a final rulemaking. Realistically, let's assume that Commissioner Chopra becomes Director Chopra sometime in the next 3 months. I would guess that the earliest we would see a SBREFA panel is late this year or early next year. Which would mean that sort of the clock for a full final rule would probably run 3 years or so after that for when the final implementation of the rule is at the fastest. So hopefully that's helpful in giving a sense of what some of the next steps might look like.
Excellent. I think the next question I'm going to send over to Katie because it's more related to some of the privacy legislation that she had talked about. With states furthering their own privacy-related regulations, should we expect additional confusion, especially in the courts, before things unify federally? You talked a little bit about sort of partisanship and some of those issues that we're facing. Would that judicial action be beneficial towards driving towards a federal policy? It's a bit of a granular question, but I think you could speak.
No, that's a great question.
How we're seeing that play out.
That's a great question. So I think that's a great question because one of the conflicts that's arising today that is a partisan conflict is should federal privacy preempt state laws? And that is a big question because there's going to be a patchwork of state laws. Right now, they all look pretty similar, with CCPA being the strongest. And so most people have already built a CCPA. But you can imagine that if you start seeing states come out with more comprehensive privacy laws, that might be problematic for a number of companies that are trying to operate in all 50 states. And could potentially impact users in one state and maybe just say we're not onboarding users from this state because we can't comply with this privacy legislation. And so that is a really great question because that is still unanswered today, is whether federal law is going to preempt state law. I think if we start seeing a bigger patchwork, that question will be potentially move more towards a yes. And then I can't speak to what would happen in the courts in this case. I think it'll depend on what the federal privacy law looks like, and if they do decide that it's just going to be the law of the land and the state laws it is the ceiling of the state laws are all compliant with it. So the court question's a little tricky, but I think we'll start to see this being answered a little bit more by federal policymakers.
Thanks, Katie. I'm going to tackle a couple of these quickly myself. We had a couple of questions about additional resources that we can look to or send consumers to. So one question was around, are the resources we recommend referring users to so that they can advocate for freedom of financial information? One easy target there is, the CFPB does have a complaints portal. So if you do have consumers or customers who are sort of facing consistent challenges around accessing their data, that's one place you can point them to. It's not necessarily the lightest lift, but of course it's one that can be really powerful. We also, as I mentioned, have a survey program that we run, and would love to hear in more detail from you on what are the sort of questions that we should be asking consumers as it relates to their control over their data. The second question related to resources was how to keep track of commercial banking payments and policy elements that were discussed. I believe we had an attendee today who is a representative of the Electronic Transactions Association, which is a really terrific resource, both for providing those updates and insights, but also doing advocacy work on behalf of some of those commercial banking and payments firms. I am now going to pass one back to John, sort of a two-part question. One, Katie mentioned the role and sort of expansion into other data fields. I know within Plaid, we typically talk about that as open finance. So 1033 covers banking accounts. We had one question related to brokerage accounts and another related to the payroll accounts that Katie mentioned. So if you could answer that quickly. And then another question more on regulatory developments, sort of heading into new leadership within agencies, and in particular, how we see those agencies working together. So the FFIEC is sort of a one forum in particular that's often looked to for some joint leadership around some of these issues. So if you could speak to that a little bit as well.
Yeah, two great questions. So on the scope of data, particularly different data sources, the way that Dodd-Frank 1033 defines the consumer data access right is actually based on the Bureau's jurisdiction over covered persons. So I will not bore everyone here by trying to get into the minutia of all the different categories of companies that are or could be considered covered persons under the CFPB's authorizing statute. But I think one, very clearly, traditional financial institutions are covered persons. And in many, maybe most instances, brokerage houses, and because they are often tied into broader financial services companies, are also covered institutions. It may actually be, and the CFPB has sort of, we've heard some questions from them on this. It may even be that some of the payroll providers could qualify as covered institutions, again, depending on how they specifically interact and the products they offer interact with the CFPB's covered persons jurisdiction. Pulling back from sort of the legal minutia, one of the ways I try and think about this is, if what we really care about is the consumer having access to all the elements of their financial information that they need to have better control over their financial life, make better decisions, and have better choices, really that is anything from start to finish that impacts their financial life. So when they get paid, that is when that is part of a consumer's financial life. Your mortgage, your investments, your savings, all of that is part of your financial life. One of the key, I think, mistakes, though it probably wasn't a mistake at the time or recognizable as a mistake at the time in Europe, was in PSD2 and in the UK localization of PSD2, open banking, they took the approach of saying, this is really about payments. We're only going to have the consumer's data right cover payment accounts. I think you would be hard pressed to find any consumer who thinks that their savings account or their mortgage or their student loan, though we don't have student loans in Europe really, is any less a part of their financial life and their financial well-being than their transaction account and their payments accounts. And I think really doing consumer-centered advocacy and consumer-centered policy work requires you to put yourself in that position of the consumer and really look at the landscape from the position of the consumer, which I think means open finance means and should mean anything that a consumer needs in order to, that is in fact their data that will help them improve their financial decision-making. It may be a stretch to get all of that into 1033, then that becomes a question for whether Congress needs to act to expand that right in the US to better match consumer expectations. There's actually an interesting link there to FFIEC, to the sort of the consumer's point of view, and that is, I think one of the big outstanding issues that policymakers are going to have to wrestle with, and FFIEC may be the forum where that wrestling takes place over the next couple of years, is how this sort of what is traditionally called third-party risk management or vendor risk management operates in a world where the consumer is deciding who they want to share their data with rather than the financial institution. This is, I think, a metaphor that's helpful for understanding it. You know, I want to say no one, but I have actually heard a bank examiner make this argument. Very few bank examiners would think that because I decide to use a check at my local dry cleaner, that local dry cleaner is now a third party to the bank that issued me the check. And that bank now needs to be responsible for any bad acts committed by that local dry cleaner, needs to, you know, conduct some oversight and due diligence over that dry cleaner, and, you know, maybe run an OFAC check on the dry cleaner to make sure that they're not in violation of the law, or make sure that they're complying with Bank Secrecy Act. But that sort of understanding hasn't really translated well in a way that everyone has spent some time thinking about it, into a world where there are 9,000 apps out there and consumers are choosing to do business with those apps and choosing to share their data. The data happens to be sitting at financial institutions, but the financial institution isn't saying, you know, we are going to work with all 9,000 of these apps. We are signing contracts with all 9,000 of these apps. It is much like the dry cleaner, the consumer deciding where they are taking their business. And much like the check is a bank issued piece of paper, the data is consumer data that's held by the bank, and that the consumer is saying, creating an instruction saying, share my information with this institution that I am doing business with. That raises some really tricky and I think complex issues, because we have a regulatory system that is used to saying non-bank parties who are engaging with consumers who are customers of banks are doing so because the bank has selected them. And therefore, the bank has responsibilities. And in fact, the bank is responsible for that third party as if it was part of the bank. I don't think that framework really works very well in this environment and in one where the consumer is one choosing. It's certainly not what has happened in Europe with PSD2 and open banking in the UK. And so I think aligning how the prudential regulators are thinking about who is responsible in those circumstances. Is the bank responsible for every potential violation of consumer protection law that any of the 9,000 apps in this country may commit because the consumer has shared their bank data with that app? I would be hard pressed to make that argument, but until the prudential regulators can get together and really sort of say what they think third-party oversight, or probably not even third-party oversight, what oversight and what the bank's responsibilities are and where the limits of bank responsibilities are in this new consumer-driven world, I think we're going to have a gap that needs to be closed. And I think that is one of the really interesting areas for further FFIEC work.
Thanks, John. Really, obviously, a compelling way to think about some of the complexities of this ecosystem. And to get to our last question today, and thanks everyone for throwing questions in here, a bit of an international question, which I'm happy to tackle because it's sort of in my scope of work here for Plaid, and it relates to Canada. So we mentioned how in other jurisdictions, specifically Australia and Europe, there are real regulations in place similar to the US 1033 rule around giving consumers rights to their financial data. In Canada, there is sort of already a fairly burgeoning fintech ecosystem, and the government is beginning to explore what an open banking structure might look like. Open banking referring particularly to sort of a holistic approach to supervising and overseeing and establishing a structure where consumers have rights to their data and there are clear guidelines for the activities and actions of the other participants in the ecosystem. So the question that we received here is, can we comment on where regulators in Canada are heading with consumer access to financial records? Privacy and consumer rights are being revisited in Canada. Is there an opening for better consumer rights? Who would be sort of the natural oversight body in Canada? So Plaid, we're fortunate to have the opportunity to participate in a couple of advisory meetings with the Finance Department of Canada, which in the last couple of years has taken upon itself the authority to institute, to start to explore and ultimately to institute an open banking law in Canada. They covered a lot of really interesting issues, including, is there an entity that currently exists that's the right one to oversee these activities? Because ultimately what we want to see is a world in which consumers do have rights to their financial data and are safe and secure as they move throughout the ecosystem. And part of what that entails for jurisdictions that are looking to implement a very sort of holistic approach is who are the third parties that are involved and how do they come into play, and what responsibilities do they have both to consumers, but also back to the policy sphere, to the regulators as well. So just a bit of a status update there. They're currently in the process of putting together recommendations that ultimately would go to the finance minister, who would sort of start to develop more fully what set of requirements they would want to live within an entity that we believe currently doesn't exist. There's some talk that maybe it's Payments Canada, maybe it's some other groups. We believe sort of in the near term, it's likely that we'll see a new implementation entity similar to what has been stood up in the UK, their open banking implementation entity, which oversees a lot of these issues. We expect and honestly are hoping to see in the near future a similar body stood up in Canada. So it's something we keep our eyes really closely on and are certainly encouraged by the interest from this group, and would love to connect with folks who have more questions on the international front as well. And so with that, again, thanks everyone so much for joining today, for chiming in with really great questions and contributing to the conversation here. It's a conversation that we really want to continue with you. So please do take a note here of our contact information, our Twitter handles. We'd love to engage on all platforms. You can probably find us on Clubhouse at some point in the next couple of weeks because there's no shortage of fintech conversations taking place on a range of new platforms. Maybe we'll start a Dispo channel for fintech as well, although I'm not sure how that would work. But thanks again so much for joining on behalf of the policy team. Really excited that we have such a vibrant community of folks who are really interested by these issues as they continue to move, and excited to continue working with everyone to build the consumer-centric fintech ecosystem that we all want to see.
Thanks, everyone.
Thank you, everyone.